This conference will now be recorded.
Good morning, everybody. This is Greg Morton. It is Sunday, July 18th, 2021. This is the weekend video update for Canslim growth stock investors via the Greenville Eastside IBD meetup group, as well as the Stockyard meetup group. So as always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses, so you want to learn first and only then invest. And Canslim, of course, is a registered trademark of Investors Business Daily. So this weekend, we're going to look at the M factor, market review, market direction. Last weekend I asked, hey, is it light gas pedal, light brake pedal, or coasting time? As of this weekend, the update is it looks like more brake pedal. Was the answer as of the end of this current week. Growth groups, we still see some improvement in that. I'm not going to go through that this weekend. We'll look at some charts and then the information on our prior meetings and some of the educational topics we've covered in detail. So the M factor, as Bill teaches, this is the most important letter in Canslim. If we're wrong on the M, we're just going to be wrong on everything else. It is, breakouts do not work when a market is in correction or struggling. So current M factor per O'Neill and IBD, we're going to look at three things in this order of priority. The action of leading stocks. We see leading growth stocks remain under pressure while some of the very large big caps may be holding up. Things are churning underneath the surface. We'll look at actions of stocks owned. So this week it was Wednesday when we got suckered punch. So we'll look at that. The market pulse, distribution day count, price and volume on the indexes. We'll look at a couple other things there too. So we're going to go to Market Smith. Let's get out of this and switch over. So here we are. Let's go up to the NASDAQ and do the indexes first. Oh, hold on. Let me reload. There we go. Okay. So here we are on the NASDAQ. So we can see the weakening, particular this week. We have 4 down days, broke the 10-day and came down and broke the 21-day. So these are the 10, 21-day exponential, 50 days red, 200-day is black. And the RS line has turned back down. Let's go down, S&P 500, broke the 10, coming down, testing the 21 on increasing volume. This looked like a distribution day on Friday on the S&P 500, but IBD, they have a different volume indicator they use, so they didn't call it a distribution day. So the NYSE, okay, this is looking worse. So now we're under the 50-day, 10 and 21 look like they're about to cross over the 50. RS line is clearly heading down. The Dow, of course, this one looks the best because the big caps, larger stocks have been holding up. The Russell, now we're seeing a lot of damage. So 10 and 21 have crossed the 50. This one is living under the 50. RS line is a pretty severe 45-degree angle down. And then the same thing on the S&P 600. RS line's terrible, living under the 50. The 10 and the 21 have crossed over each other and both crossed over the 50. So sometimes the small caps lead the way down, and that's what we see them doing right now. And if we go down here, let me find it. So these are tickers in Market Smith. This is GMIAA. So this shows us the Dow and the S&P 500, and then the New York Stock Exchange advanced decline line. So it's not too bad. You can see it's rolled over, which is not good as the index is hitting new highs. But this is where we can really see what's happening with the growth stock trade. So here's the NASDAQ. It's trending up, and you can see that the advanced decline line from here, has been down. In fact, right there, you can see it peaked, this peaked, the NASDAQ kept going up, but the decline AD line did not hit a new high, and in fact has been seriously trending down as the NASDAQ has continued up. So that's quite the divergence, and it's just showing there's narrow leadership. And Mark Minervini had noted on IBD Live that while he's seen this before, he's never seen it to the extent that he is seeing it now. So that's important to take a look at. The other thing to take a look at, of course, the ARK funds, these are pretty much a decent proxy for the growth trade. So we can see this is ARKK, which is the flagship one. So again, rolled over, moving average lines are starting to point down, and it's down under the 200-day and the 50s under the 200-day. So hadn't been in great shape. ARKQ, this is the tech and robotics one, again under the 50-day, living there. ARKW, so this is the internet one. Again, 50 still under the 200-day, and threatening to go under the lower 50. The genomics one under the 50 and the 200. So that's sort of the most speculative one. Financials, a little better. That one's holding the 50 and the 200. And then the space one, the newer one, ARKX. So you can see where it is. It now has a 50-day moving average, and it's plunged down under that. So just another way to sort of help gauge the growth trade along with the coloring book. So just looking at the first column where I designate each day as sort of, was it a buying or accumulation day, or was it a selling type day, even if it wasn't an official IBD distribution day. So a lot of red recently. Here's our 25-day window up at the orange dot. And so, the red days are dominating the green days lately, and the count has flipped. Now we only have 7 buying days and 10 selling days in the 25-day window. So, the markets, when that happens, it seems like the market's not making much progress. And then this week, so on Friday, it got bad enough where the NASDAQ flipped to MMTS yellow. Remember, this is based on the moving average line. So for that to happen, the 10-day has to turn down, the 21-day exponential has to turn down, and it has to go under the 21-day moving average. All that has to exist on the same day. So that happened on Friday on the NASDAQ. So that's showing some weakness. And then if it goes 1% or more under the 21-day, it will flip to red. So the S&P 500 is still green. Friday, the NYSE flipped to red. So all 4 of the conditions were in place. Dow is still green. Russell and S&P 600 have been red forever. And then IBD flipped to yellow. Uptrend under pressure. So still an uptrend, but it's under pressure on Friday. So just visually, we can see the weakness coming in. We have 3 distribution days on the NASDAQ. The active ones have a dotted border around them. We have 5 on the S&P 500, and actually on Wednesday, this was even clustering, which is 4 in the last 8-day rolling window. This was actually 4 in 7. So that's sort of distribution on steroids, just another warning sign there. And then let's flip back. So the group teaching portfolio. So interesting to note. So the last 3 weeks, we've had a really bad day each week, Thursday, and then as I said, it was, the sucker punch was sort of Wednesday on this week where the growth trade really got hit. Stops got triggered this week. A lot of the figs got taken out at the 20% profit. The shares that were up 50%, the stop had been moved to protect at least a 20% gain. Most of those got knocked out this week. So we just had these bad selling days sort of each week. And, Canslim's designed to push us out of bad markets and pull us into good markets. And so it did some pushing out this week. We're down to only 58% cash invested. I know David Ryan on IBD Live this week, I think he said he was about 50%. I know that Mark Minervini has said overall he's net short. So he still has some longs. He said that, I think, on Twitter, maybe on Friday, not midweek. So that's what he was seeing. We're only up 8.61% year to date. And then because earnings seasons started to confirm the dates in here, got a ton of the things in here are going to hit that that last week in July, and we may not have sufficient cushion to hold through earnings days. So Canslim may raise additional cash in the group teaching portfolio and just sit back. How much cash is in there? Yep, 217. So till the index, till it improves, it's hard to take additional exposure right now. So let's go back. It was everything I wanted to review. Oops, sorry, I have to go through those. So some general notes. So I had noted last weekend as well as the weekend before, I was seeing more setups, it seemed. I had about 50 on my first pass watch list before I narrowed it down. I had 40 last weekend. It's less this weekend. It may be around 30. But most of these that were setting up and the 5 or 6 that made my top tier watch list, they all look bad by the end of this week. So it's just a lot of damage in the charts. Recent breakouts, last weekend I noted they were working, scratch that out, put in struggling this weekend. So we'll look at NVIDIA and the Generac charts. Several IPOs were acting well. Previously, as of this weekend, buzzsaw week, as I mentioned. And then the MMTS shifting to yellow and red on the indexes and the buy sell day count just deteriorating. So I already showed you that in the coloring book. So last weekend I said it was a stock pickers market with narrowing and weakening leadership. Now it's just narrowing and weakening leadership. Minervini, net short. And also he's focusing on compounding and selling quicker. As I always say, make sure you're doing a weather report, not a weather forecast. There's no way to predict, but we do have to make some decisions. So last weekend, I asked that question and I said, hey, it was not pedal to the metal and it was not lock down the brakes. But this past week says more break time until proven otherwise. So it could change. We have earnings seasons coming. Maybe that could push the market up. But right now, the interpretation, not the prediction, is this remains a hard penny, seller controlled, distribution dominant tape. And so that's the language I use. I do not ever say I'm bullish or I'm bearish, because that there's an emotional component to that and it locks you in. So I just try to say, step back and ask the question, what kind of tape is this? And so, Mark Minervini, the hard penny comes from him, seller control, distribution dominant. He's used all that phraseology. So I probably got all that from him. And it's a lot easier to just ask the question, what is the tape currently, rather than saying, oh, I'm bullish or bearish, because that involves a predicting component, and we don't want to do that. So I use different language and don't really talk about bullish and bearish at all very much. So let's go back to Market Smith. I said we would look at a few charts. Weekend update. So here's Generac. This has clearly been one of the leaders. It broke out, it had volume discovery coming into it. It triggered the 8-week hold exception. If you use that, I have a video on the Stockyard page where I about 30 minutes teaching on that and explaining that it's a lot more than just going up the 20% within 3 weeks from the breakout. So you can sort of check that out, and talks about which market environments you even use that rule in. So this one hit the profit goal and now has turned and has come back down some. Still looking strong, but it's a question. This market's been so tough. Everything that hits the 20% profit goal, the few that do, seem to turn around fairly quickly. So it's kind of what Minervini said. He was even taking profits early and just compounding because things were rotating so fast. Then NVIDIA was obviously another leader. This one does not look good. We did have a partial position in the group teaching portfolio and just took the profits at the 20, somewhere in the 20 to 25% profit goal. Now looking like, that was a good decision. Look at that volume coming in. And of course, this one's getting ready to have that big split next week. So if you go back, Apple had a big split not too long ago, and so did Tesla. So if you go back and look at Apple and Tesla and focus on the split dates, you'll see that both of them ran up into the splits and then sold off and trended sideways for a decent amount of time after those splits. So I'm not saying the same thing will happen, but there's just two recent examples of these big splits. I think theirs is 4-for-1, and then Apple, I think, was 4-for-1, and Tesla 5-for-1. Or I might have Tesla and Apple backwards, but they were both very big splits. So we'll see what happens, and how it handles that split this week coming up. Dexcom, so here's a couple that are still holding up. Don't know if they'll have enough cushion to hold through earnings or not. We'll just have to see. But this one in a poor market has actually done well. I think it's up 9 weeks in a row. When you look at the weekly chart, it's right there at all-time highs. So, if it broke through that with volume, that would be constructive. AVTR, so this one's been holding up, in a poor tape recently. So you can see it didn't have that many weeks up in a row, but it's hanging in there just above the buy zone. Biotechne, so this one's struggling to get progress after its breakout. Didn't really trigger a sell rule. We'll see what it does. Vive may be another one to watch. Has a cup with handle. Can it break out? And then this one this week, this is not a full and proper base. It did come above this sloping trend line. You could go back and study whether it's a high tight flag because it did sort of double from down in here, or from the standard pivot breakout. And so that would be an early alternative entry. Very strong Canslim earnings and sales. Not great return on equity and pre-tax margin though. And it doesn't have any fund sponsorship in those top rated funds. So we'll see what it does. Maybe it rolls over, but people were looking at that, and that was a potential entry, early entry, but the indexes were bad this week. So we just passed on that for the group teaching portfolio in light of the M factor. So that pretty much wraps it up for the weekend. So our July meeting, which we had last week, I walked through the entire newspaper, how I used it in the weekend review, and then we went through the buyable gap up setup since we're on the verge of earnings season. I don't know that we're going to meet in August. It may be September before I set the next meeting. And then we looked at the recent IPOs. Of course, we met on Tuesday, right before the bad day on Wednesday, when everything got whacked. We looked at some of the group teaching portfolio. Oops, sorry for the typo, that sort of thing. As I mentioned, this weekend's video, as well as several others, including that one on the certaintied 8-week hold rule, which is really the certaintied 8-week exception to a rule, which I cover in the video. You can review those, like them, subscribe if you find that helpful. Prior, some big educational topics we've covered that people order the prior meeting recordings and slide decks. So there's one on Canslim A to Z in May of last year, weekend routine in August 2020. And then if you don't have written sell rules, these three, actually spent 3 months going through writing a set of sell rules within the Canslim system and walking through all three trading zones on the MarketSmith chart and what are true market leaders, that sort of thing. Looked at my sell rules in the third one at that time, because they do get modified and tweaked, but those three need to be ordered together, and by the end of it, you should have your own written set of sell rules after you go through those 3 meetings, which I think were very detailed and helpful. I've gotten very good feedback on those. So questions and contact, 2 meetup sites are Greenville Eastside IBD meetup and the Stockyard. So you can join those. The Greenville East Side one has a bunch of Canslim resources linked under the message board, top 2 pinned messages, the group teaching portfolios in there, the coloring books in there, that sort of thing. It's under the More tab and then message boards. And if you're interested in the monthly meetings and recordings, you can join the Stockyard because I coordinated all through that. Prior meetings can be ordered. Just shoot me an email and I'll send you the list and order and instructions. They're $10 per meeting, just like you attended live, except for the one that's in there on IPOs. It has a different higher pricing that's explained. You can follow me on Twitter, and then the Stockyard YouTube page is where those videos are. So that's it. I hope you have a great weekend routine. Interesting next 2 weeks coming up between earnings seasons and a weakening market. Do we see if earnings seasons pushes it up? It could. Do the buyers come back in with force? It could. Or it may just continue the dog days of summer with low volume and just, churn and burn, slice and dice, which we've been seeing lately. So that's it. Have a great weekend.